Welcome back to the show. Let's talk to Tim Gregory, Chief Investment Manager for Vermeer Investment Management Ltd. Morning to you, Tim.
Morning, Mick.
Mining. Gold, 11-month highs this morning. Geopolitical. We've talked off air. You like the miners. You've talked about Rio's Billiton. What are your thoughts right here, right now?
Well, I think there's been a big shift in the mining industry and the way to invest in it. So in the past, it's been all about the enormous boom in Chinese infrastructure. And actually, most of the mining companies, while they did very well out of that boom, they didn't actually use their capital very well in the past, and they made some bad acquisitions and actually really wasted phenomenal profits that they made from that. As things have settled down, and even though iron ore prices haven't been that strong, although they bounced from their low levels, what we're now seeing is fantastic capital discipline from companies like Rio. We think that Billiton is emerging in exactly the same way. So I don't really mind if the iron ore price is $75 or $60 or obviously high. Obviously it's better for short-term profitability.
Yep.
But Rio Tinto is the lowest cost producer in the world. They get iron ore out of the Pilbara in Western Australia at a very, very cheap level. They will be profitable and highly cash generative and much more disciplined with that cash than they have been in the past. That means for investors, they're going to pay down debt and they're going to return to capital to shareholders via dividends and more share buybacks. So we just see this very big shift in the way that the companies have been run relative to where they were run not so well in the past under new management who've really got religion now about capital discipline.
But
we see that as an opportunity.
But isn't that all about sort of super cycles? The minute everyone says the headlines of the super cycle, then basically management pile in, okay, and a little bit more irrational exuberance.
Well, that is exactly what happened last time, because obviously everybody thought that the Chinese boom in infrastructure was going to last forever. And there was quite a lot of new investment in iron ore mining from all over the world. So new capacity came on stream just as Chinese manufacturing slowed down.
Yep.
And, you know, in February of 2016, the iron ore price was a lot lower and everyone was very, very bearish about China. But actually China's recovered. Infrastructure spending is picking up. They're being much more disciplined about their steel industry. And so it's not about what the iron ore price is day to day. It's just about the cash flow characteristics. And my view is that we will not see a return to super cycle. We must invest our capital in new projects which might make money if the iron ore price was a lot higher. It's all about running the business on the basis the iron ore price stays relatively low,
Yep.
being highly cash generative and giving that money back to investors in a disciplined way.
Finally, gold. Higher or lower this time next year?
Well, that's really difficult to say. It's had a very, very good run, obviously, because of the geopolitical tension that we've seen, and obviously it tends to do well. We own gold equities. We don't own gold per se. We own gold equities. We own one company in our portfolio called Newmont, which is an American-based company, which we own, because it is a bit of an insurance policy that if the gold price does go higher, because I think the answer to your question is if we see a continued escalation of geopolitical tension, gold price will probably continue to go higher. If it all eases and go back to where we were 3 or 4 months ago, the gold price will probably head back to 1250. But in the meantime, just as with Rio and just as with companies like BHP, gold company managers are also using much better capital discipline than they did in the past. And the last results of Newmont show them to be highly cash generative, all-in sustaining costs for getting gold out of the ground at more like $900. So with the gold price around here, they're very profitable.
Yep.
And we're very profitable even at $12.50. And that's our focus of why we invest in those companies. But I think also it's a good insurance policy.
Tim, we've run out of time. Thank you very much.
Thanks very much.